Hey everybody, this is John and welcome to the free video. So we've got a market right now where all the big attractive tech stocks are kind of taking a break. You can see right now Google has been flopping around, not the most bullish chart on the planet. Amazon has had a tough time. It's holding up a little bit better, but it's still kind of experiencing that, it's got to catch its breath. Facebook, of course, under pressure. Apple, the news is out on Apple. It's ready to take a breather. Netflix, looks pretty decent as well, but none of these stocks are like ripping it up or making new highs. So where is the money going to? Well, it's going into stocks like Boeing. Of course, some of it's going into the weed stocks. A lot of action in those stocks right now as well. But we've got some nice, solid, what I call normal setups not those kind of a crazy moves here. And so the question came up because somebody was asking today, especially like around Amazon, is that, hey, where is the next buy entry in Amazon? It's like, well, when you've got a setup that you like, what you do is start training yourself to look for the setup, regardless of the stock. And look, I love trading Amazon, but there are times when, the setups that are out there are actually better in other stocks. And so the setups that I'm seeing right now that I would say are better than other stocks also have to do with rotation. So, where is money rotating right now if it's not going into, the big FANG stocks and things like that? Well, a lot of it is going into, well, if you look at financials, so you're starting to see money rotate into financials. If you look at energy, money's flowing into energy. And you just want to kind of keep in mind that these things are cyclical. They rotate. They take a little bit of time. And just keep that in mind as you're going through and look at that. So right now, in terms of like long plays that I can be kind of comfortable with, I'm looking at energy stocks. I'm looking at some of the basic material stocks that normally are frankly kind of boring, but they're having solid moves right now. Okay, so that's the first part of this. And then the second part of this, as we come into monthly expiration, what are the things that we want to look at? Well, this is kind of where, as we get into monthly expiration, one thing you got to be really careful about here is don't sit, if you've got like long calls that expire in 2 days, you're taking a really big risk because the odds of those working out are tough, because there's a lot of actually pressure on stocks into monthly expiration. It kind of keeps it pinned down, and then once monthly expiration is over, the stock is free to go. So I would recommend, if you're on the fence and you've got an option that it's going to expire in 2 days, get rid of it and just roll it at least in the next week. Then you have 9 days, or better yet, a little bit further out. Because what we're looking at now is more what I just call pinning. So what's pinning? So pinning takes place where you've got a particular strike on a stock. This happens to be Starbucks, where you've got a lot of open interest at one strike, in this case $55. And what we look for is that the stock actually ends up just kind of trading sideways around that number into expiration, with the idea that all the options on this side lose value, as well as all of the options on this side lose value. And so we just set up trades here where this is like a naked straddle, where you sell the 55 call and the 55 put, in this case for $1.02. Right now it's 70 cents, as every day it slowly loses value. Now the safer way to do this is you do a naked straddle with protection. So you can see here I'm still selling the 55 call and I'm still selling the 55 put, but at the same time I'm also buying the 57 call and buying the 53 put for protection. Now in this case my credit is only 90 cents versus $1.02, but the amount of buying power it requires is much, much smaller, and I can sleep at night because if for some reason Apple buys Starbucks tomorrow at $100 a share, this position will be fine, whereas this one will hurt me very bad. Also notice too, on the naked one I'm only doing one lots, right? But on the protected one I can build up the size a little bit. So just keep in mind that's the kind of action that's going to be dominating the next couple of days. Hope it helps. You guys have a great rest of the evening, and we'll see you at the next update.